Most business owners are missing out on one of the biggest tax deductions available today. It's called the QBI deduction, and it could cut your tax bill by up to 20%. But the rules, they're confusing. There are income limits, there's weird exceptions, and if you don't plan for it, the deduction can vanish completely. So in this video, I'm going to break it down in plain English. We're gonna cover what QBI is, who qualifies, and how to make sure you don't lose it. If you're new here, I'm John Rojas. I've been helping business owners like you build wealth and reduce taxes for the past 28 years. Let's get into it. So let me tell you about a client of mine, Rachel. She's a successful consultant. She was making great money, but her CPA never mentioned the QBI deduction. She'd overpaid by thousands every single year. Why? Because she didn't know she had to structure her income a certain way to qualify. Once we walked through the rules and restructured her business just a little bit, she saved over $18,000 in taxes that year. And that's not unusual. I see this all the time. Business owners are working hard, but no one's showing them how to play the tax game smart. Listen, if you're liking this video, make sure you hit the like button so that other business owners can find it. So, what is the QBI deduction? QBI stands for Qualified Business Income. It's a deduction that lets you write off up to 20% of your business profit before taxes are calculated. So if your business earns $100,000 in profit, that's potentially a $20,000 deduction. But it's not automatic, there are rules, and if you don't know them, you could miss out completely. So who qualifies for the QBI? To qualify, your income needs to come from a pass-through entity. Think sole proprietorship, LLCs, partnerships, or S-Corps. You don't qualify if your income is coming from a C-Corp, a W-2 job, or investments like dividends or capital gains. But even if your business qualifies, you might not, especially if your income is too high. For 2025, here are the income limits. Single filers, full deductions are available under $182,100, and they phase out up to $232,100. If you're married filing jointly, full deductions are available under $364,200, but they start phasing out and they phase out up to $464,200. Over those limits, things get a little tricky, especially if you're in a specific service trade or business, like consulting or financial services, such as myself. So here's how to maximize the deduction. Here's where it gets really interesting. Even if you're close to or over the income limits, there are ways to still qualify legally and smartly. First, we'll look at the S-Corp strategy. You want to pay yourself a reasonable salary, and the rest of your income flows through as QBI. Income timing is important. Delay billing or defer income to stay under the limits. Next, real estate aggregation. If you own rentals, grouping them can help you qualify. And then cost segregation. Accelerate depreciation to reduce taxable income and stay under the threshold. Could also avoid the SSTB classification. If you're in that gray area like tech consulting or software sales, make sure your business is positioned correctly. These are the kind of strategies that we walk clients through every day. If you're not sure where you fall, let's talk through your situation. Book a 20-minute consult in the link below, and I'd love to have a cup of coffee and just talk through what might be going on for you in your business. So why does this all matter? Look, you're working hard in your business, you're doing the right things, you're serving your clients, you're growing your revenue, but tax strategy, it's usually the last thing on your list. And that's where the money leaks out. I've seen business owners save $5,000, $15,000, or even $30,000 a year just by understanding and utilizing the QBI deductions the right way. You don't need to master this stuff. You just need someone who knows how to apply it in your situation. And if you need help, just reach out. Helping business owners build wealth, keeping more of what they earn, well, that's what we enjoy doing. Thanks for watching. I'm John Rojas with Tribox Private Wealth. I'll see you next Monday. Have a great week.